Hello, and welcome to another edition of CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, November 11th. In Australia, the NAB Business Confidence Index fell to a record low in October, as the RBA's rate-cutting campaign has yet to provide relief amidst the financial turmoil and global slowdown. The confidence index fell from -8 in September to -29 in October, while the Business Conditions Index fell to -11. The Australian and New Zealand dollars fell the most in 2 weeks against the greenback today as stocks slumped on the worsening outlook for company earnings, prompting investors to sell higher-yielding assets. From an intraday high yesterday near 0.70, the Aussie dollar pair dropped below 0.65, a 500 pip swing in 2 sessions. The clear failure to break the 0.70 level spells further weakness for the Aussie ahead. In Germany, wholesale prices fell 1.5% in October, a bigger decline than was expected by economists. On the year, prices are up 3.6%, which continues a trend of decrease since its peak at 9.9% in July. German investor confidence unexpectedly rose in November as governments and central banks stepped up efforts to fight the turmoil on financial markets. The rescue package of the German government for the financial sector and the planned economic stimulus package seem to have slightly raised the confidence of the financial market experts compared to the previous month. The German index rose 9.5 points to -53.5, which is still well below the historical average. Despite the better-than-expected ZEW report from Germany and the Eurozone, the euro-dollar pair fell strongly in favor of the greenback in today's New York trading. After trading near 1.2750 overnight, the pair broke down more than 200 pips to set a new low near 1.2510. This pushed past support at 125.50, which was the low from last week. European stocks fell today, snapping 2 days of gains, as banks and oil shares fell amid more downbeat data on the economy, and oil fell below $60 a barrel. The pan-European Dow Jones Stock 600 index declined almost 4%, while the UK FTSE 100 index was down 3.6%. The euro-yen pair, which fell about 360 pips yesterday from its high near 128.60, saw another 270 pips slide today as stocks in the US followed those in Europe into the red. In the UK, the BRC retail sales monitor showed sales down 2.2% for the year in October. This was the 5th straight month of declining sales and was the biggest yearly drop since May of 2005. Total sales, including new shops, fell 0.1% on the year. Consumer confidence is deteriorating despite general approval of government rescue plans and interest rate cuts. The RICS house price balance showed about 82% of surveyors reported falling rather than rising prices, a slight improvement from last month. However, at the same time, the number of sales per surveyor in the last 3 months fell to its lowest level since records began in 1978. In a second release, the Department of Communities and Local Government saw its house price index down 5.1% compared to a year ago in September. Even though both releases beat expectations, they still paint a grim picture of the UK housing market. In a bit of good news, the UK trade in goods deficit shrank to £7.5 billion for September, as exports rose more than imports. Falling oil prices lowered the import bill, while higher exports of precious stones helped exports. The figure beat market forecasts. The pound continued its descent against the dollar, falling below 1.45 to set a 3-week low. Support at the 1.5570 level was broken overnight, and New York trading saw the pair fall as the greenback gained from risk aversion and flight to safe assets. Tonight, Australia will release data on consumer sentiment and wage prices. Overnight, Japan follows with its household confidence. The UK posts data on employment for the month of October, and the Eurozone will reveal data on industrial production. There are no significant releases from the US or Canada tomorrow. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.